Alright guys, this is going to be a pretty important review, and we're going to start off. We have a couple of things to go over. But we're going to start off with the morning commentary on our move up. So, we got ES and we got NQ. What I was talking about before I left the live in the morning. If we are going to have a reversal, it is going to be off of a move off of SMT. NQ clearly making it low. ES clearly making a high, right? We have our SMT here. Now, in terms of liquidity, right? What do we notice? ES stacked these relative equal highs at its high day. So it's a session high that has the relative equal highs. Let me make it a little bit cleaner. Right? Session highs and their equal highs. NQ, SMT putting in a low. Where's our buy side on NQ? We have our high day here, but we also have another very clear target is relative equal highs here. ES did not put in a low. It has a higher chance to run this external. NQ put in a low. It has a very high chance of running these internal highs within this 1 minute FVG. Now I want you guys to notice, and this is where you want to be mindful of trading. It's like stepping through. I don't want to use too bad of an analogy. Let's say you're walking to a dog park and you don't want to step on shit, right? You don't want to step on shit, so you're very mindful of where you're stepping at. If for whatever reason the owner did pick up the shit. Same with ES and NQ, where you want a longer short. You want to be mindful of where ES and NQ are on a higher time frame. And I think a lot of people didn't even catch this on this move up. Before NQ took off, equal lows, right? Equal lows. They're from London. We took those equal lows at 11 a.m. Eastern and tapped back into a fair value gap. Higher time frame fair value gap. Lower time frame inversion. LR. Also, hourly FVG. So there's no reason you should be bearish here, excuse me. So you should be looking for only upside. And this is why I was able to catch this upside. But now, that's not it, right? After SMT, what do we need? We need a displacement. And to go back on my higher time frame, we tapped into a higher time frame for liquidity sweep. I post models all the time. And there's one model I called the highest probability IFVG setup, right? What do we have built up? We have our 15-minute gap tap. We have our LR built up. This looks like this, doesn't it? Sell side take. Price taps into a higher time rate FVG. We get an inversion, and we run our low resistance liquidity run with our buy side targets at relative equal highs or equal highs, which we have on NQ right here. So this is this. I've seen this play out a million times. I know exactly where price is going. And a lot of people didn't even see that the 15-minute gap got tapped into, or when we were trading on the hourly chart, right? There's no reason for us to be bearish. The only reason I took that short and caught such a nice move on SPX was some internal liquidity down here. But that's it. As soon as it got taken out, I was looking for upside. I didn't see any candles that I liked here. I didn't like any trades. But once we had our SMT, because I knew if we were going to move higher, it was going to happen off of SMT. SMT equals reversal with displacement. Now it's as simple as waiting for our entry model with this inversion gap. You could have entered this inversion here or this inversion here. And it truly does not matter in this case. Because as soon as I saw this 11:18 candle and 11:19 failed to put in a new low, it was to me it was confirmed, and you can take the first inversion off of it. Target this LR. ES. Here as well. You could have waited for this gap too. It doesn't matter. You don't have to catch the whole move. We're trading in a 10-point range on ES. So if you're trading ES, you could have caught this move and caught literally half the day's range. Now, let's play price action. Right? Desi, when do I know how to when to close my position? Well, we're in a range, so we must have liquidity being taken. And ES finally, after a lot of chop, took out its high of day. And that is your trade. NQ moved cleaner on this move. NQ took out his sell side and moved cleaner on this move. Whichever indice you took, this is how you want to catch it. And that's why I was able to catch this, you know, so spot on with the commentary and exactly what's going to happen. It is literally this. I don't post these models for clickbait, guys. That's one thing. When I post these on Twitter, when I post these on anything, you know, Discord or whatever, I'm not posting this so I could get reaction on Discord or likes on Twitter. I'm posting this because this is the most high probability inversion setup there is in the market. Like, I need everyone to understand that. Sell side liquidity, higher time frame gap, and then we get our move back up to our buy side liquidity, right, off of inversion. This is our highest probability setup when it comes to inverse fair value gaps. And that is something that I want you guys to kind of watch and look for with this. So if you're only there for the inversion, you know, recap thing, you can stop watching the video here. What else am I going to cover is that we have some Q&A questions. And the first question that I'm going to answer is, what the fuck do I do at these highs? Great question. These highs are very tricky to play. If you guys notice, most of my trades are not coming within the start of the day or anything like that, because I need to see how price is playing out before and get clear areas of sell side and buy side and see where price is tapping into before I catch my moves. So the morning trades have been, you know, obviously today was the exception, but I've been trading pretty late into the day now. Just to be, you know, having extra insurance, especially on our days that we gap up. When we don't gap up, it's a little bit easier because you can take, you know, our London highs as buy side, or, you know, some previous day highs buy side. But when we have a gap up overnight and we're opening at like brand new prices, never tapped before, it's a little bit tricky. So I usually wait for an initial move down after open and then target my current New York high as my area of liquidity, kind of how we did today on ES, right? This is our open. We had a strong open. We came down, and now I saw that we put in relative equal highs right here on ES. So once we took our trade, I knew exactly where our buy side was. So it's more of being patient and not pressing too many buttons throughout the day, because, like I said, I wish I had a better answer, but I am trading this price action for the first time as well in my life. So it's a little bit, you know, just being patient and just seeing what the market has been giving us. Lately, the market's been displacing, right? Displacing off of open, sweeping liquidity, and then having a reversal intraday, right? That's just kind of been the motto lately. So, you know, you see those trends within the market and you start playing those and trying to exploit those as much as best as you can. When does the market correct? I wish I had a better answer for that too. I don't know, but I do know how to get my bias, right? So let's see, or let's just say we're on the daily chart here. NQ and ES look a little bit better now in terms of being in sync, right? We're finally getting some expansion on both indices at the same time. We took out all-time highs. Both indices at all-time highs. Both indices have a daily FVG. So, for short-term bias, I am going to be looking for moves like this, right? This gap will get a reaction for the most part on a smaller time frame, even if it's going to be inversed. Now, notice how when we had our inverse gap here on the daily chart, NQ was still respecting this daily fair value gap right here. So there was some S&T occurring on the higher time frame. Now that both indices are likely going to tap into the same FVG, if this fair value gap that was created today on the daily becomes inverse, we will go for a sell side liquidity, because both indices are going to be correlating in this sense that we are both going to have a inverse gap if it happens, right? If it happens, I don't know. I'm going to be playing to long this gap, right? If we get a smaller time frame move within this fair value gap and we get a long setup, I'm going to take it. But this is how you could potentially kind of play a quote-unquote a reversal, is now that both indices are correlating, right? They're having that correlation. They're at the same spot on the daily chart. They both swept all-time highs. They both have the same fair value gap at the same time. They're both going to tap into this fair value gap at the same time. It's going to make your buys a lot easier. Continue to look to buy these dips, right, on ES and NQ on the smaller time frame. But now let's say we tap into this daily fair value gap. Am I going to press the buy button right away? No, I need my higher time frame to match my lower time frame. If my lower time frame doesn't, the setup doesn't come, I'm not taking a trade. Simple as that. If it does, we press the button. Win or loss, we live with the result. Inverse, same thing. If that gap flips inverse and on a smaller time frame, I don't get a good setup to short, I'm not going to take it. If it does happen, we will. We live with the results. Should we remain bullish indefinitely? Yes, we're in a full-on bull market. We shouldn't really be looking to swing short or anything like that. And I would just keep, like I said, keep looking to add to your, if you have leaps or whatever. I mean, you should be up good already. But I would just, any correction we have, whether it's any 3% or 2% downside moves, I would keep adding. Obviously we need I would say a 7 to 10% retracement move. Do I think we're going to get it? I don't know. But it's pretty much by the dip full effect here on indices. Should I look at individual companies more than indices? Normally when you're playing tech or anything related that way, they move with the indices regardless. So that's kind of up to you. Different names have different, personalities and what the ticker is. So I don't really know how different tickers play. So you might have to study up on that before you actually start trading. How do the contracts move when the underlying moves $1 or whatever the case may be? Because not all option contracts move the same, and some of them, the stock could go higher and your options contracts are still not green. Play more upside than downside on company, aka wait for pullbacks and play longs. Yes. Don't be so caught up on trying to catch the top, right? We rather play the longs back up than trying to catch the top, if that makes sense. There's no point in trying to get chopped up here or trying to catch tops. I would just look for, any type, like I said, if we get any type of big move on the daily chart or weekly chart to the downside and we're tapping into different bullish PD rays that we haven't already, I will look for longs and getting long swings there. Expect to play the actual pullbacks soon. I would not. I usually, I always say this. I'm not looking to become a top. I'm not trying to top tick or bottom tick anything. If we get our moves to the downside and if we have our higher time frame shifts back up, there's no reason for me to not long it. Going off with this is a full-on bull market. So I would rather play the move back up than the actual move down. If I miss the move down, I'm fine, because I know that's going to get retraced right back up to the upside, and it's probably going to be with more speed as well. All right, that was those questions. Let's see. I already answered Andrew's question. Let's see. All right, I think we're good with that. So I don't want to make this longer than it needs to be. If you guys have any more questions, make sure to just message me or put in the Market Talk in Discord, and I'll be able to get those. So I hope this kind of helped you guys out, and I'll catch you guys in tomorrow morning's live.